So let's go ahead and get into this video. I don't care for long intros. This is somewhat of a mini course for new traders, my existing followers slash students, whatever you want to call them, my friends that already know what I teach. This video is going to be so important for any real Forex trader who is trying to grow their account, their capital, their little small live account, and turn it into something that is substantial to where you're actually paying bills with the profits that you're making from the market. And I'm going to try my best to explain it step by step, understanding how crucial it is to, one, have risk management rules, and I'll tell you the exact rules that you should use. I'm going to tell you the broker that I use, which, it's up to you if you want to use that broker. I'm not affiliated with them, so don't come at me. I don't care if you go with a different broker. 3, how to grow and compound your account like a professional trader. And I'm going to go over a few examples because this is something that's really, it's beyond important for new traders to understand this. And I've been funded before, right? I have 7 years experience with this crap. I've been funded when then the company paid me out $6,000. Yay, I'm a rich trader. And then the company went out of business. And at that point, I was like, all right, screw all the prop firms. And then I tried to go get more prop firms, and I finally was getting funded again. And then, there's a stupid little consistency rule that you get nicked for. Or, now the U.S. is regulating all the brokers. So at the end of the day, there's only one safe haven I have. That is a U.S. regulated broker. Okay, there's only 2 that I know of that I trust, that I can confidently say I've never had an issue with them. They're very professional. Everything is very professional. You literally you can trade with a business with these brokers. As a business, sorry. I have a business, Never Down LLC. It is literally the most professional way to trade, but you choose what you want to do. So let's go ahead and get into it. Sorry, that was somewhat of a long intro. I'm sorry. What a hypocrite. All right, so how to trade Forex and grow a small account. So the first thing you need to understand, have your strategy set up. Like I can't explain all this to you and you not even have a strategy. If you don't have a strategy, you can go to my website, look at the strategies. This is my Instagram. If you want to go check out some of the trades that I do, I post all my live trades to set up the analysis. Look, that's literally a trade hitting take profit, set up, take profit. And all of these are real-time trades. You can see on these, people used to get on me about, you're just taking pictures of charts. Brother, these are times. These are live candles. All of these have live candles. You can go back and test any one of these out. They're all live candles, right? So I post a lot of my trade. I literally try to post every single day. If there's no setup, I won't post it. But I post all these trades, right? Tell you when I'm getting in. Look, let's see if we can break the high. Close partials. I'm going to break even. Price came back down, stopped me out. I got my workout stuff on here. All right, let's get out of here. No, we're getting way too... All right. So let's get into it. Risk management rules. These are the rules that you need to know. You need to know that when you win a trade, you're done for the day. If you use proper risk and you waited for your take profit to get hit, you're done for the day. If you lose your first trade, take a second trade. You can either lower your risk or you can use the same risk. Do not martingale it, or martingale, whatever you want to call it. Martingale. Don't risk more to make back all your money that you lost in the first trade. Don't do it. So you need to, for a fact, not have these issues right here. Revenge trading, over trading, FOMO trading, over risking, right? They're all kind of together. But they're very different, right? Everything has its own little problem that you have to see what's going on with yourself and be like, okay, I did all this right, but I just messed this up. How do I get rid of this part of my bad habits? So if you win your first trade for the day, you're done. Stop. Go on to the next day. Every single day gives you a unique opportunity in the market to profit off of it, to exploit the market. It's not going to give it to you 20 times a day. I don't care what you think. I've scalped all day, every single day. I've took 20, 40 trades in a day before. Doesn't help. 1 to 2 trades. The reason being it's 1 to 2. If you win your first one, you're done. Okay? You don't take a second trade and try to push your luck. If you lose your first trade, take a second trade, use half the risk or the same risk, try to end the day in either profit or break even, beautiful, move on. If you lose your second trade, you're done. So it's only 1 to 2 trades no matter what. Okay? So understand that. If you lose 2 trades in a row, just be done. Don't be stupid. Be done. All right. Now that we got that out of the way, you have to have your strategy in place and you have to know, what you're doing. But risk management, that's kind of the risk management. Use for live accounts, for your own personal live account, you can risk anything from 1% up to 5%. But the problem being, right, whether it's regulated or unregulated, I would say anywhere from 1 to 5% is completely fine. And people want to say that 5% is too much. It's like, no, it's not. If you have a decent strategy and you know what trades to take and you're not sitting here, with a half-assed strategy, like what trades to take, 5% is completely fine on a high probability trade. Mind you, the best looking trades can still be losses. I get it. But sometimes you have to risk it for the biscuit, because if you do that, let's just say you always risk 1% or 2% and then you see a really, really good trade and you risk 4% or 5% on that trade, well, guess what? You lucked up. You lucked up and you made a decent amount of return, and then you go back to your proper risk. That's fine, but you have to have a control over it. You have to be really, really good with what you're doing. But it comes in time, right? It's not like you're going to be fighting yourself over, whoa, what should I risk? You should know what you should be doing. So which broker I use not Forex.com. I used to use Forex.com, sorry. There's only 2 regulated brokers, right? US regulated brokers, and I only trust regulated brokers because there's somewhat of a protection around my capital. You can also trade as a business with these companies. They're very professional. You literally have to apply to trade with them. I'm not going to go to an unregulated broker, drop $5,000 in an unregulated broker where all they ask for is my name and my email and then they pay me out. No thanks. I'm good. I've done that. I don't want to do that no more. Like, I'm good. I don't trust none of that stuff, especially with all the regulations going on. So, oanda.com, right? It's oanda.com and it's forex.com. Those are the only 2 U.S. regulated brokers that don't have problems, don't have issues, don't have crazy slippage. They don't have, the servers just shut down randomly. I just haven't had any issues with them. Everything is very simple, right? There is another very, very important thing that you have to understand, which is the leverage on those accounts, right? Those accounts are 50 to 1 or 1 to 50, whatever you want to call it, right? People say it forwards, people say it backwards, 50 to 1 or 1 to 50. That's basically it. So if you need to understand leverage, Google, I can never say Google. I said like Google can teach you that, but I wouldn't put all your trust into what Google has to say. So 50 to 1 leverage, right? I'm gonna tell you right now, because they don't tell you this anywhere. You can't find this anywhere. Nobody tells you on YouTube, because they don't go and trade their own capital and actually risk it. They just yap a lot. With a $2,500 account, I'm gonna give you an example right here, and this is a real example. This is because I've done this and I've tested this out. With a $2,500 account, your max lot size, depending on the pair that you trade, right? Let's just say for USD JPY, you need, you only have access to a lower lot size compared to if you traded GBP JPY, you can use a higher lot size. Nothing exponential or crazy, but with a $2,500 account, you can only risk about 0.5 to maybe almost 0.55. So like half a standard lot on these accounts. Don't worry. People think that this means the end of the world. They can't trade. They can't make money. Oh, brother, I'll show you how to make money with it. It's fine. This is not crazy. You have to get the greed out of your mindset. You have to get the idea of being rich in a month out of your mindset. Grow up and realize that this is not how you're going to make any sort of success in this game, by just trying to flip accounts. It just doesn't work like that. If you don't have the mentality, you don't have the strategy, you don't have the experience, it's not going to work like that. This is the least stressful way to trade, make money, and use that money to pay your bills. This is the least stressful way, if you listen. So let's say you have a max lot size of 0.5, right? Now with that max lot size, or max lot, did I say that? Max lot size, that does not mean, right? That does not mean that you can't make $150 or $200 on a trade off of this account. That doesn't mean you can't. that just means you just probably need a larger move on the trade, right? So what I wanted to go over was, the idea behind the strategy that you should be using for these live accounts that are regulated, that you only have a very small lot size on. You have to wait for price to come to let's just say you want to take a buy. Well, you have to wait for price to come to an area where it's the lowest it could possibly go, have a proper stop loss, and then you have to have the faith and the mentality and the confidence to hold it to that high, that 65 pip high. If we're on an uptrend, we're going up. I mean, why would I not trust that it's going to go break those highs? That takes time to have faith and confidence in your strategy. So let's just say it comes down to this area. Well, I'll take a buy and I'll aim in for a high. It's an uptrend. I have no reason to get scared and get out right here. Mind you, with my strategy, what I do is I take partials at about a 1 to 2 risk to reward ratio, right? You'll see it on my live trades that I post on Instagram, right? I'll close maybe 80% or whatever, and I go to break even, and I just let the rest run. But I always set up my 1 to 2 risk to reward, because the strategy has high probability win rate, but at the same time, I'm not stupid. I'm taking money out of the market. I've done this way too long to be like, oh, I'm just going to hold every single trade, to a 1 to 8, a 1 to 9. Like, it just doesn't work out like that all the time, man. You're going to drive yourself crazy. So that's how you would use a small account with a low lot size, or a very, very small lot size, to make money. Now, another crucial thing you need to remember this is you're going to immediately take your first trade. Let's just say you take a loss and the second trade's a loss. You are going to be so annoyed with what you have to do next because you didn't even think about this. And I'm going to go ahead and save you the trouble. Hopefully you're going to remember this. I really, really hope you do. Let's just say you take that trade with that 0.5 lot size position. That's the max lot size. Remember, I said max lot size. You cannot go 0.55. You can't go 0.6. It is max lot size 0.5 for a $2,500 account. With that max lot size, you enter a trade. All right, you took an L. And let's just say you took an L where you lost probably, 3, 4, 5% of the account. Okay, no big deal. It's really not a big deal if you lose 3, 4, 5% of a live account. This is where the big deal comes into play. The loss is not the problem. The loss, the L, the big problem you have is when you took that max lot size position. So I'm going to explain to you now. If you enter that trade with that max lot size position, lose that trade, and you're down maybe $100, let's just be safe and say $100, okay? And then we go down to 2,400. Let me tell you this much. You won't be able to enter the second trade. Like, let's just say it's Monday, you took an L, you lost $100 at a 0.5 lot size position. You wait till Tuesday because you followed your rules and you didn't overtrade, you didn't over risk, you didn't yada yada. And then it's Tuesday. And then you try to enter a trade at 0.5 lot size with a $2,400 account balance, and you can't do it because you already used your max lot size. And our leverage, I assure you, that's what happens. Your leverage is still going to be in effect. Your margin is now, your account balance is lower, all right? So you can't use a 0.5 lot size anymore. You could probably do a 0.45 or a 0.46, right? 0.45 or 0.46, we don't know, right? You won't know until you go to enter that trade. It depends on the pair that you're trading as well. Remember, it's not exactly like this for every single pair in every single scenario, but this is exactly what will happen to you. You'll enter that max lot size, take an L. You'll try to make back your money on the next day. Not even try to make back your money. You're just following your plan, but you go to use that max lot size and you can't do it. Not enough margin. All right, well, you're forced to do a lower lot size, 0.45. Wait a minute. We're using a lower lot size to try to make back our gains that we lost on a higher lot size? That's a lose-lose situation, if you ask me. And I know this from experience. That is a lose-lose situation. So how are you supposed to trade a U.S. regulated broker with a small account that's live that you're trying to build? You want to make it to, you want to see a $5,000 account. You want to see a $10,000 account. You want to be able to take a few trades here and there and make a few thousand. Well, the only way to properly do this is to start back at the beginning. I don't want this video to be that long. Dang, sorry. But this is really important stuff. Start back at the beginning. So we say that we're at, let's just say you fund the account back to $2,500. We are no longer going to use that lot size, that max lot size of 0.5. And I know it doesn't even seem like much, but I'm telling you, it's the only way to do it. And I'll tell you how on the third step is how to grow and compound it. But we want to go ahead and use half the lot size, half the max lot size, okay? I know it doesn't seem like much, but we want to go ahead and use 0.25 lot size. Now, the one thing about the regulated brokers is that no matter what, the thing you have to get past it, you just have to just think past it. The spread. Now, for my pair specifically, GBP JPY, the spread is 3 to 3.9, almost 4 pips, no matter the time of day. Matter the time of day. When there's high volatility and a lot of volume, the best times to trade, no matter during any one of those sessions where it's amazing time to trade, it is 3 to 3.9 pip spread. Okay. Now that's tough for scalpers. All right. So the reason that I tell you that is because the only way you're going to get past that is by finding the best possible entries, having the best strategy that you're getting in at the lowest area to buy to make it to a new high. That's the only way you're kind of going to grow those accounts. But even if not, even if you just held it to a proper risk to reward like I do, you don't have to hold it to a new high, hold it to a 1 to 2. At least you made twice what you were willing to risk. Even with that, you keep doing that. You do not change your lot size. The next day, you don't go and sit there and say, I'm going to trade 0.4 now. No, because if you lose that trade, or even if you win that one and the next one you want to raise the lot size again and lose that, you're going to keep going through the same cycle. You have to keep a consistent lot size for these U.S. regulated broker accounts. You have to, especially starting off in the beginning. I don't care what any of y'all say. This is how you do it. All right? It's very simple math. So, well, it's not simple, but it's very simple once you understand, what you're working with here. So that 0.25 lot size, just make it simple and say half your max lot size, okay? 0.25. Now, when you start winning a few of these trades and you start seeing a little bit of profit in the account, right? The reason that you want to use that 0.25, if you lose 2 trades in a row, you can still use 0.25 lot size, right? You're not going to drop down to being able to only use 0.1 lot size. That's not going to happen. You have plenty of wiggle room if you're using half your max lot size. So just be consistent with your strategy. Now, let's just say now we are at, let me skip, a month. Let's just say a month later and you're at, which again, you guys you'll be like, that's nothing. Well, let's just say a month later, you're at $2,800 in the account, right? And you're still trading at that 0.25 lot size, okay? Let's just say you're doing that. Well, the next step in this, now that you have this down and you're able to see profit and you're able to have no stress over how much you're risking with your max lot size, that crap's out of the window now. You know to use the proper lot size. That gives you wiggle room, that lets you grow the account so you don't have to stress about it. This is amazing. This is an amazing opportunity because you don't have to stress about risking your entire account or half the account on one good trade because you wanted to go crazy and hit a 3 standard lot. You can't do that here. It helps you preserve your capital, but you have to approach it in a whole other method. This is how you have to do it. So you're at $2,800 because you were consistent with that 0.25 lot size. So once we get past this idea of we're in profit and we've made some kind of return, right? You're no longer at $2,500, the initial account balance. The third step is how to grow and compound your account. So what we'll be doing from here on out, and a lot of people have doubts about wanting to do this, but this is how you do it as long as you stick with that lot size. Whatever you want to risk as far as your own personal funds, not the account, not the percent risk, not the lot size, your money in your pocket, your money in your savings. Whatever you're able to risk and lose and not give a crap about, don't put your last dollar in. Do weekly deposits or monthly deposits into that account. It's a savings account. This is a savings account, right? That's how you have to treat it. I treat mine like a savings account that's building compound interest. It's the same idea. So if you want to go ahead and drop, just another $100 at the end of the month, or maybe $200 or maybe $50 a week, brother, I assure you, in less than a month, you'll be sitting at 3K. Now, it doesn't seem like much. I know it doesn't seem like much, but you have to understand this is the name of the game. A month down the road after that of doing the same thing, right? You're at $3,500. This is how you grow the account. It's the only way to do it the professional way. And guess what? You are not at any risk of blowing the entire account this entire process, given that you continue to trade at that 0.25 lot size, half your max lot size. It's just, this is math. This is how it works. And there's obviously more numbers involved, but this is how it works. It's not difficult to do, but you have to have your strategy. Your strategy. Two, you have to have your consistency down, right? So like I said, no over trading, no revenge trading, no over risking, no FOMO trading. Not trading when you're hungover, not trading when you're high, not trading when, whatever it is, whatever problems you got, right? Don't trade when you're excited and you win and you want to take another trade because you just won that trade. Oh, ooh, I'm gonna gamble a little bit. No, this is a business. So, anyways, this is the name of the game. And once you get to a comfortable, and this is all on your judgment, whatever you want to do. Once you get to a comfortable amount, let's just say you're at, 4,500 now, a few months down the road, right? Stop trying to get rich so quick. It doesn't work, I assure you. A few months down the road, you're at $4,500. Okay, well, hey, maybe we can go up to 0.4, 0.4 lot size. Because at that point in time, 0.4 may be now the half of the max lot size we can use for that account. So just starting off, make sure you don't use, that's kind of take this from it, starting off, whatever your account balance is, try to figure out your max lot size, okay? And sometimes, I don't know how you can figure that out. Nobody tells you really. The brokers don't really tell you. They just tell you leverage, and then you got to do a bunch of math, and it just tells you how much you can risk on the account. It doesn't tell you your max lot size you can use. Unless you have a method, and you tell me, you'll teach me something. I'm hard-headed. I don't care to ask anybody for information. I just know what I know. So at that point, maybe increase your lot size. And now guess what? You're going to keep doing the same thing, bro. Keep doing the same thing. You're almost at maybe 4,800, right? Sorry, 48,000. Let's just be realistic. 4,700. Let's just say the month was a little weird. 4,700. A month later, you're still trading at that 0.4 lot size, and then you invest. You're doing your monthly, your weekly investments of whatever you can afford, whatever little bit you can afford. But the whole point of compounding that is so that you're never going to lose, a large chunk of your account unless you're over trading. You're never going to lose a large chunk of your account. If you're sticking with half the max lot size, you keep compounding your account by dropping $100 a week or maybe $100 a month, whatever you can afford, right? You're going to be sitting pretty soon at 5,000. So now when you start risking whatever it is, let's just say 2% of the account, and you're making, let's just say $100 to $150, depending on your risk to reward, right? If you risk 2% and you have a 1 to 2 risk to reward, you're making $200. Dude, you're going to be on the way to hitting 10K eventually, and 10K is a really, really big deal. It is. This video is getting way too long. So I'm trying to break down the simplest way to grow a small account, live account, and how you have to approach it. There is no other way to approach it. If you're working, bro, work and put more money in the account. There's no reason you shouldn't put money in the account if you are confident in your skills. So, and again, if you're not confident in your skills, listen, brother, go check out my website. I got a website, and as you can see, it is safe. This link is safe because it's for business, because we're businessmen. This is my website. I have a course here. Yes, it's $299. That's for brand new traders if you want to do that. I've got $199 for just my traders who have experience and need a price action strategy. The same strategy I use. There's my payouts that I got. Dude, this is a 4-hour class, right? 4 hours. I forget what this is. I don't know how much this is. An hour and a half, maybe. But at the end of the day, it's like there's only one way to reach your own success. Are you really thinking you're successful if you're getting a prop firm challenge and you got one little measly payout? You don't even have that money. That money's not even yours. The capital you're trading with is not yours. And I get how there's barely any risk involved. But at the end of the day, go with a regulated broker. I mean, you think that all these stock traders out here that are making money in the world, they're not with a regulated broker? They're with regulated brokers, brother. If we're talking about, 6 figures of capital, they're not going to go put it in an unregulated broker and just move on with life. I couldn't sleep if $100,000 was sitting in an unregulated broker. All right. So, anyways, yep, that's about it for this video. Hopefully, you took some knowledge from that, and yeah. Follow me on Instagram. Follow me on YouTube. I really don't care if you do or you don't, but at least if you made it to the end, thank you, good job, and stay focused, man. Don't over risk, don't over trade, don't revenge trade, don't FOMO trade, don't get too greedy. Take your profit. It's an amazing day. It's always an amazing day when you follow your plan, you close out for profit when you should have. You leave a runner, you go to break even, and you let the price go to wherever it wants to, and whatever happens, happens, and you're already moving on with the rest of your day. You know? So, stay blessed. Love you, brother. Love you, sister. That's all I got. Later.